We making moves. We making major moves. We making moves. We making major moves. We going all in, like we got nothing to lose. We making moves. We making major moves.
What is up, everybody? I'm Mr. Man. Welcome back to my channel. Sorry to point at you like that, but it is what it is. Today we're going to be going over some terms here, because a lot of these terms are used interchangeably and not many people know what they are. Today something just clicked and I was like, I had my aha moment here. Now when I listen to these individuals talk, these higher up entities, I'm not talking about entities like Gary Gensler and the SEC, the lower regulators. I'm not talking about the bank level regulators. I'm talking about the standard settings bodies, okay? That's where we're going to be going today. So let's start this deep dive here. Let me give you guys some definitions first, and then we'll take this journey. So here, today we are talking about the difference between cryptocurrencies and digital assets. A lot of people assume that the word is used interchangeably and that they mean the same thing. They don't. Bitcoin's cryptocurrency, digital assets are things that can be used and integrated into the current financial system to help bring the web into Web 3. Web 2 to Web 3. It's not a whole new financial system where they're changing their platforms, changing up policies, changing up roles, changing up... None of that's happening. None of that is happening. They're keeping the same policies, same regulation, but they're just updating and amending regulations now to allow for digital to be the core of the infrastructure. Meaning these banks are not using Bitcoin. Some banks might buy Bitcoin, or some other entities might buy Bitcoin to use as a means to move a message, because Bitcoin only moves message. It's not a store of value. If it was a store of value, it would be pegged or referenced to a real world assets, RWA, to a real world asset, meaning the value of this mouse here would be encapsulated in the Bitcoin, and then I'd move that value to somebody else, whoever wanted the Bitcoin. It doesn't. It's a speculative asset. So when they talk about cryptocurrency as a speculative asset, it is. Bitcoin and Ethereum are cryptocurrencies. So cryptocurrencies and digital assets are often used interchangeably, but they have differences that make them uniquely suited for certain use cases. Cryptocurrency is a type of digital asset that uses cryptography for secure financial transactions and operates on a DLT called a blockchain. Examples of well-known include, of course, Bitcoin and Ethereum, crypto. On the other hand, digital assets refer to a broader category of assets that exist in a digital form and can be stored, transferred, and managed electronically. They include cryptocurrencies, NFTs, stablecoins, security tokens, digital art, music, virtual real estate, and more, tokenization. While other cryptocurrencies are digital assets, not all digital assets are cryptocurrencies. The main difference between the two is that cryptocurrencies are specifically designed for use as a medium of exchange. Digital assets can be used for a wide range and purposes. All right. Therefore, cryptocurrencies have their own blockchain, whereas crypto tokens are built on an existing blockchain. Digital assets encompass anything minted and exchanged on a blockchain, including cryptocurrencies, NFTs, and other tokens. So here we are now on Investopia. I'm going to come back down to here. I just want to show you guys. That we are on Investopia. You can see the name on the top left there. Anyways, how does Ripple work? Ripple Labs, Inc. is the business that created the XRP ledger, which is a digital asset, and cryptocurrency XRP, which is a digital asset. XRP is used to pay for transactions as the exchange medium, so a medium of exchange that bypasses the slow and sometimes inaccessible traditional cross-border payment system. So we've determined that XRP is a medium of exchange. Here I am now. So we've determined that XRP is a medium of exchange. According to my AI, yes, XRP is a medium of exchange. It's a cryptocurrency token used to transfer funds across border at a low cost and quickly, serving as an intermediate exchange mechanism between two currencies or networks or blockchains. All right. XRP is used to pay for transactions. It's a gas token. And as the exchange medium that bypasses the slow and sometimes inaccessible traditional cross-border payment systems, it is used to facilitate quick conversion between different currencies and can be used as a form of investment, as a medium of exchange for other cryptocurrencies, or to finance Ripple network transactions. So it's a gas token. And most people picture a gas token like Ethereum that have high fees, whereas XRP and XRPL doesn't have high fees to operate on the XRPL. So, but the amount of transactions that can happen at one given time on the XRPL network itself, utilizing XRP as that medium of exchange, is just insane how fast you can change from this dollar to this dollar to this object to this moving to this tokenization to this NFT to this whatever it is, all these things moving. And when they're using XRP, it's going to be just swap, medium of exchange, just swapping things like you would not believe. So then at that point, I believe I believe that the terms already exist. It's just putting the term to the cryptocurrency. I'm sure the example that I just described already exists, and that will be a stablecoin of sorts. Because to move those high frequency things and potentially high value as well, this thing would have to scale up. It couldn't be $10 to move billions and trillions and quadrillions. It'd have to scale up and scale up and scale up and continue to scale up. It couldn't be cheap. It cannot be cheap. All right? I've had people come up to me and say, Mr. Man, not come up to me, but online, Mr. Man, you're leading people astray. Do you really think XRP is going to be a high valuation? In all honesty, guys, flat out, I do. I'm here because I do. I don't make money from nobody, not a single person here. I go to work every day. I do 7 o'clock to 3 o'clock, get back home. I own real estate. I have investments. I'm learning to trade. I make my own money. I'm not here to make money off of nobody right now. So I will be putting out a real estate course. But I make my own money. I'm not here to shill no projects. This is something I believe in. My time, my emotion, my sweat energy, my sweat equity, my emotions are put into this. But at the same time, I keep my emotions in check. All right? So here we are now on the MAS website, Monetary Authority of Singapore. This is their, okay, pick a time, remind me later. This is their management team now, and there's a reason I'm here at the MAS. But it says, MAS, Monetary Authority of Singapore, is led by Mr. Ravi Menon, our managing director. Find out about our management team through their backgrounds. So here we have him right here. Okay. Mr. Ravi Menon was appointed managing director of MAS in 2011. He was previously permanent secretary at the Ministry of Trade and Industry, MTI, and deputy secretary at the Ministry of Finance. So back to where we were, right here now. We are on, I want to say, this is the Yes to Digital Asset Innovation, and No to Cryptocurrency Speculation. Not podcast, but conference they had. Yes to digital asset innovation and no to cryptocurrency speculation. We just went over those terms, okay? Now let's hear what he has to say, what Mr. Ravi has to say.
A digital asset ecosystem needs a medium of exchange to facilitate transactions. The three popular candidates are stablecoins, cryptocurrencies, and central bank digital currencies, or CBDCs.
So here we have it now on Ripple's webpage here. CBDCs and stablecoins accelerate payments and reduce costs. XRP operates on the XRPL as a medium of exchange. It facilitates CBDCs and stablecoins. It is a cryptocurrency in a sorts, but is more of a digital asset than it is a cryptocurrency. It has a central entity known as Ripple backing it, or behind it, sorry. They have no say in what happens to XRP, what it does, what it doesn't do at all. It's a consensus mechanism through the nodes that collaborate or make the consensus at that point. Ripple has no say in it. So they meet the definitions there that MAS was just talking about. Let's go back.
How does MAS view each of them? What's our position on each of them? MAS regards cryptocurrencies as unsuitable for use as money and as highly hazardous for retail investors. Cryptocurrencies lack the three fundamental qualities of money: medium of exchange, store of value, unit of account.
So here we are now on a Bitcoin website. It is bitcoinexchange.com, I believe it is. And Bitcoin offers a unit of account. What is a unit of account in terms of Bitcoin? They're known as sats. Sats are the 0.0000, whatever number it is after the decimal. That's what a sat is. A Satoshi, they're known as the Bitcoin. Like a dollar, a penny, a 10 cent, a nickel, a quarter, whatever it is, pound, pence, I don't know the terms. Australian coin thingy. Anyways, a unit of account in terms of Bitcoin is known as account, or denominated as a sat. Imagine yourself going to go buy a flight, and you have to go online. Okay, how much is this flight in sats? Not happening. First off, I don't know any website that says we'll accept Bitcoin as a measure of payment. Any creditable website. But I mean, picture that. They're like, okay, the flight will cost you in terms of Bitcoin 0.0025 sats of Bitcoin for you to get this flight from, let's say, Canada to London, an 8-hour flight. And you pay your 0.0025 sats at that point. It takes 10, 15, 20 minutes to finally transfer with the fees involved in that. And they finally get that now. And they say, well, Mr. Man, your payment is under. You're going to send us another 0.00025467891 10, 11, 12 Satoshis. I'm like, what the hell? When I sent it, it was enough. It was enough at that point. I'm not sending that. So at that point now, am I going to argue back and forth with them? I want to go. I've already sent that money, or that Bitcoin, that crypto. They're not going to send that back to me, because when they do, it might be even less than what I received or what I sent initially. So yeah, no, it doesn't meet the definition. I mean, it offers a unit of account, but that totally doesn't meet the definitions yet. So it offers a unit of account, but let's continue this journey. Definition 2, medium of exchange. Does Bitcoin meet that definition? Bitcoin is often considered a medium of exchange, but its adoption in this role is still limited. A medium of exchange is a good used to facilitate the exchange of other goods and services. While Bitcoin possesses the essential criteria to be regarded as a medium of exchange, such as being a widely accepted intermediary instrument for buying and selling goods, ain't no one doing that. You're not walking to Starbucks and say, again, give me 0.00254911911 7-Eleven, for that Starbucks coffee. Like, it's not happening, man. It's not happening. I watched this one guy, he was talking about soon things are going to be reevaluated, and they will be reevaluated. And he's like, things are going to be reevaluated in sats. And no one knows how much a 0.005 of a sat is. That's pegged to the U.S. currency. It's not pegged to global currency. So then at the same time, is the U.S. currency always going to dominate? Not from what I see. It's still the top dog right now, but it's a slow, progressive step down from its current position. So where does that leave Bitcoin? Right? Do the math. Let's continue. That moves us on now to store of value. Is Bitcoin a store of value? What value does it store, is my question. Let's go into this. Bitcoin is considered a store of value due to its restricted supply and increasing demand. So it's based off of supply and demand. And it's limited supply amount. To me, when I hear limited supply amount and this could be good, that's speculation. That's like a real estate investor thinking, I'm going to buy this house because houses always go up. And as you guys are learning now, through this time period that we are living through, nothing always goes up. Nothing is forever. There's no such word as forever. Nothing is ever. Forever never seemed that long until it's gone. You feel me? So, with real estate, when we're talking about values, we're looking for cash flow. Cash flow is king. If you're buying a property to live in that property and say in 20 years, and this is your plan, in 20 years, I'm going to sell this thing and I'm going to live off of that money. That's a poor plan because you are speculating that it's going to go up in value at that point. But again, living through what we're going through now, you never know where life's going to lead in 20 years from now, right? Your retirement could be botched and you could go through what we're going through again right now. It's cyclical. So if you don't plan this right, you can go through exactly what we're going through again. So you don't buy real estate on the trying to bank that it's going to go up in value. On the speculation it's going up in value. You buy real estate for cash flow, and that cash flow you get on a monthly basis gives you an earning, gives you a dividend, whatever you want to call it. The rent you get back, you reinvest that, buy a house with that. Now your asset, your house that has renters in it, is paying for your house, right? That over here, this rental property is giving you cash flow. That's a store of value at that point. And should the value increase over time when you go to sell it, fantastic. Should it not, and you planned it out right, you still have cyclical cash flow depending on how you set it up, month over month. Or if you have a Airbnb daily, or if you have mid to long term. So you can get paid 3 different ways depending on how you structure the properties. If that's a 4-plex, 5-plex, 6-plex, 100-plex, you can structure them all differently and determine how you want to get paid out. And when you go to sell at that point, if it's appreciated, fantastic. You played the cycle correctly at that point. You planned it out. You're not buying it and speculating it's going to go up in value, but you can force an increase in value. You call it a value add at that point. When you buy something and evaluate it at a really low valuation compared to everything else around the area that's high priced, buy something cheap and needs to get fixed up and renovate it up to that value at that point. So now you've created that difference in terms of what that property is worth. So now you can sell it for a higher value, and you're not banking on it increasing over 20, 30, 40 years. No. You force appreciated it. That's working on the human emotional and psyche and psychology for a perceived value. These ones are worth this much, so I can make this one increase in value and make it worth this much too, simply by renovating. You can't force Bitcoin like that. Bitcoin is simple speculation. I'm going to hold this in hopes that it goes up. People are speculating it's going to go up. It's going to go up. Yeah, it will go up. To what degree and what's going to bring it back down? Bitcoin is speculation. All right, you feel me? It's speculation. So now that we've gone over that, let's hear this from some of the actual people who have the ability to value digital assets. All right, all I do is listen to these things all day long and read PDFs all day long while I'm at work, and then I can let those things fester in my head and come to my conclusions based off of what these people are saying. I'm not giving you a lot of my opinions. I used to, but I'm creating my belief based off of what they say. Let's get into this.
Really looking at them as a form of currency, the difference being it's not backed by a government entity. So a virtual currency, when you really cut through it, it's not insured. It may have some value, but the value that it has is only because people believe that it has value. And Romel, am I saying it too strongly, or I'm not saying it strongly enough? When we really think about cryptocurrencies from a value perspective, is it really that they only have value because people believe they have value?
Yeah, I think that's a fair point, David. I mean, but I would also say that is that different from fiat currency? The fiat currency is traded because everyone else believes a piece of paper is worth something, right, and can be exchanged for real goods and services. And that belief comes from the fact that a government stands behind that currency. We do see currencies failing and inflating and hyperinflating. I think it is. You can look at it very similar to fiat currencies. If enough people believe there's value and it can be used, as a store of value, then it will have value.
And I think, one of the questions that came in advance, and just to touch on it again, it's a much deeper question: is it a hedge against an inflation of cryptocurrencies? Again, in this context, it doesn't have the full faith and credit of a government behind it. In many cases, Bitcoin, an example, there's a finite number of coins, so they're not adding any, so that says that, all right, the value goes up and down, not because you're adding supply, it's just because of the underlying demand changes. So there are some differences. There are some similarities.
David, if I could just quickly add, for a long time, one of the proponent arguments about digital assets was that they were uncorrelated assets, or they were stores of value, or they were inflationary hedges. I just wanted to point out that there is a convergence within.
Did you hear that? He switched it from cryptocurrencies to digital assets. Notice the switch. Notice that shift. Stay with them, okay? Stay with them. Like we were talking about, they're two different things.
In the larger asset management sphere, where we're seeing not just crypto fund managers, but we are seeing, let's call them traditional alts, hedge funds and venture capital and others who are also investing in digital asset and venture capital and blockchain technology investments. And therefore there is the two worlds are merging. So therefore, if something hits the hedge fund industry, like a major event that would cause people to liquidate out of the hedge fund industry, it's going to also affect the digital asset or cryptocurrency industry. Perhaps several years ago, they were two industries that were not directly connected. I think we're seeing more and more correlation, more connection. So the idea of them being totally uncorrelated assets is starting to shrink away.
Cryptocurrencies, digital assets, what'll be the thing to make them hit? What'll be that moonshot, that slap shot, that hockey stick? What'll be that? What'll make that a reality for them, for us? I'm more interested in us than them, but, I'm following along with them because I want to see what happens for my life. And they know what'll happen, so I'm listening to what they have to say.
Hands it off. Thanks.
Great. Thanks, Harry. Thanks, Alkesh. There are a lot of questions, and so everyone, please forgive me if we don't get through all of them this evening. I'm going to kind of go from start to finish. One of the earlier questions has to do with how demand will be driven by institutional investors. You just mentioned that you started coverage 7 weeks ago. We're talking about a massive institution. So what do you see in terms of drivers for the institutional investment side into this asset class?
Sure. So I think there's a few drivers, right? There's one driver is client interest. Seeing $3 trillion of value be created, I think clients of institutions across the board are saying, hey, how do I get involved in this? That applies to incumbent banks, it applies to mutual funds, it applies to hedge funds. I'd mentioned that board members had better be asking their corporate management teams, what's the strategy? Again, and I'm not saying that they should do anything with it, but they have to have a strategy, or at least they have to have a view. And so that seeing all of that asset value creation, I think is a significant driver. The second one, though, and what's held, I think, banks and most of the institutional world back is the lack of regulation. All of this took people by surprise, right? Bitcoin's been around for a decade, but Bitcoin really wasn't doing anything to hurt anybody. It was around. The central banks couldn't care in any real way, and so they knew it was there, and that's why they started pet digital currency projects, but they weren't really afraid of Bitcoin. But now with these new ecosystems being created, with financial applications being created where they're offering interest of 5%, 7%, where people are investing in some of these things without knowing the risks, with no consumer protection, where some of these coin offerings look a lot like an initial public offering, but without all of the disclosure and regulatory filings, that's attracted a lot of attention. And I think as the regulatory framework gets created, you're going to see the large institutions really want to enter this space, and they will. And you're already starting to see the little steps that they're taking to do that. But nobody wants to, if you're a large trusted bank, the last thing you want to do is offer a service or do something and then have a regulator say it's illegal. Even if it wasn't illegal when you were doing it and you stop immediately, it's still horrible. right? And so that's the second reason. And then the third is really companies actually should start using digital assets. And I think as that becomes clear, I gave the Microsoft supply chain example of saving tens of millions of dollars. A real expensive service that companies do is give dividends, right? It's a very manual process of actually setting up the dividend and so on. You could tokenize securities and you could have a smart contract that pays the dividend. You could potentially save $6 billion a year across the board by tokenizing dividends. So the back office capabilities of really saving money and are amazing. So I think those are the three big drivers.
Digital assets and the back office. XRP, XLM, XDC. These are the back office. These are the back office, not Bitcoin trying to be a decentralized thing going from peer to peer, not exchanging any value. It's just I move ones and zeros. My one, it's usually just zeros. Picture it as a flat line, and then one means something happened, an event happened. An event would be Mr. Man had triggered a Bitcoin movement from this wallet address, from this date, at this time, and here's the hash for it, and it gets sent over to the next person, whoever I sent it to, and it's not KYC'd, so I don't know who the address is that I'm sending it to at all. If I get it wrong, I get it wrong. If I get it right, fantastic. If it's wrong, that's it. That's that. We're not operating in a world like that, okay? Where people are, millions upon billions of people are going to be sending money back and forth, or sending a currency of sorts, a digital currency back and forth, where if something happens, they can't call somebody up to say, hey, Chase Bank or Barclays Bank or TD, RBC, Canada, like, I can't get my money back. I did this, and that's never going to happen. And of course, as we spoke about last day, Regulation E in the States is what helps to prevent this, or helps to correct this. Consumer Finance Protection Board, at that point, they can go and determine what happened and reverse a transaction. There's no reversal of transactions with Bitcoin, right? It's just whatever happens, happens. Here we are on the Bitcoinist site now. This is an article from 4 years ago. I'm going to bring this around full circle, okay? There's Mr. Garlinghouse himself. Turn on the VPN, sure. Ripple to become the Amazon of crypto by 2025, said Brad Garlinghouse. We are in 2023, okay? Let's keep going. Brad Garlinghouse, CEO of Ripple, took to the airways and spoke with CNN's mainstream Julia Chatterley about the current state of Ripple, XRP, and the company's plan for 2020. Garlinghouse concluded that in 5 years, Ripple wants to become the Amazon of the crypto industry. Ripple grew during the bear market. Other blockchain projects had layoffs. Ripple had grown tenfold. So now that we know Ripple had grown during the bear market, which we're still living in, Brad Garlinghouse says that Ripple wants to become the Amazon of the crypto industry. Does that include XRPL and XRP? Or is that just Ripple, the company at that point? Let's dig into this just a bit here. Just a bit. Here's where I want to go.
Private companies in this space that are likely to exit somehow, maybe they get bought, but their value in aggregate is around $300 billion. Which means that's real investable when it comes public. And so those companies are going to be showing up. And again, you have to be careful because it's early. Some of them are not going to make it. But there are going to be the companies that are actually the picks and axes of this system. They're going to be the companies that actually are going to potentially be the Amazons of this ecosystem. And they're not at the, starting line yet, but they're very close.
Interesting. Thank you.
Is it just me, or are they speaking the same language at that point? Is there something we should know? Maybe, maybe not. Who knows? But I'm just saying, I'm just showing you the connections there of what they are. We've gone through XRP, we've gone through the medium of exchange, store of value, unit of exchange, medium of exchange, unit of account, and store of value. We determined that Bitcoin is cryptocurrency. XRP is a digital asset. They're talking about digital assets and infrastructures, and the big boys moving in. Big boys moving in.
And that was, one of the parts, one of the subtitles of my report is it's the Wild West. And the report we wrote 2 weeks ago was Law and Order is coming to the Wild West. So, there's obviously going to be much higher administrative costs. There's going to be more disclosures. If people that house wallets certainly are regulated as banks, that's going to change the way they do business. It's probably going to cut into margins. There's a lot of short-term impact from regulators. On the other hand, the longer-term impact is what I was saying before, is that suddenly you're going to see the banks, the mutual funds, the hedge funds come into this space because they'll be able to trust a framework for them to actually do business in it. And, trading digital assets is important because clients want it. They want to be able to buy these pieces, and they want
to be able to buy digital assets, not cryptocurrencies, digital assets. Okay? Notice the interchanging of words still. We're still along the same rail. We've swerved in and out of there, but we stayed within these rails. Not swerved in and out, swerved and bumped and forth and bumped back and forth, but we stayed within the rail still.
Counterparties that they trust as well. They don't want to, you're not going to see very large mutual funds, institutions go onto a decentralized exchange where they don't know who's on the other side of a trade. And so, and they can't, for their fiduciary duty of the investors in their funds, they can't be just trading with anonymous. Maybe in 100 years, the rules will change and they'll be able to, but in the regulatory framework that's not changing, if we can get rules around these assets, you're going to see all the banks be trading these things and offering these services. And that's really cool, right? Is that if you can start tokenizing a security issuance, you're now able to give it to many more people because you're really using the internet. If you're able to, for example, tokenize, so let me give you an example. If we were creating Uber today, we could create an NFT. We could then have, Uber, the Uber app, the Uber company, obviously, is a really cool company, great network effect, massive scale. But again, if we're just creating it today, NFT, we figure out the 6 main things the dispatcher does as a service. We create 6 smart contracts. We could create the Uber app as it existed when it first came out, probably within 90 days. But the difference is instead of the Uber app being owned by Uber, the company, this app or this NFT, we could do a distributed coin offering. So the drivers own the app and users own the app. And the more you use the app, the more coins you get or the more value it increases because there's a little transaction fee that gets collected each time. And that's really the promise of the bit of digital assets and the blockchain. It's not that you could stay anonymous and do illegal things and blah, blah, blah. It's that you're actually changing ownership from, one guy who owns all.
Did you hear him start to say the Bitcoin and then stopped, caught himself and transitioned or pivoted to digital assets? Notice the difference there. Notice the difference. So inevitably, this is how it'll look. All right.
Ultimately, we want some governance and some level of trust. And regulators want a certain throat to choke when something goes wrong. And that is really what makes an ecosystem real. And that's where we're going. That's why we were able to have that $1.5 trillion increase in the last 3 years, is because this part of the ecosystem is not that pure vision of Bitcoin and the pure vision of blockchain. And, for me, I'm agnostic. I just want to know where the value is going up and where the value is going down. I don't really care whether it's decentralized, semi-centralized, or whatever. But definitely the pure vision is certainly not hurting at $1 trillion of value in 10 years. But I think if I was going to look at the next $30 trillion for this ecosystem, I would look at the semi-decentralized part.
So here we are now. Is Ripple semi-decentralized? All right. Ripple is often described as semi-decentralized. While Ripple claims that XRP is decentralized, there is a substantial controversy around this claim. Ripple's governance structure is considered centralized and hierarchical, as a company typically is. The Ripple network has not decentralized much from its point of creation, and for years, all of Ripple's clients were set to trust only Ripple's validation nodes by default. Ripple employs a consensus mechanism called the Ripple Protocol Consensus Algorithm, or RPCA, which uses a pre-selected group of validators for consensus, making it different from proof-of-work systems used by many cryptocurrencies. This approach, along with Ripple's focus on collaboration with established financial institutions, set it apart from traditional decentralized cryptocurrencies like Bitcoin and Ethereum. Therefore, XRP is often referred to as semi-decentralized payment protocol designed for major financial institutions to adopt. So listen to this part here. This gets really, really interesting. To me, at least. I want to take you guys through this.
I became a true believer. And that was at a time when they were so cash flow negative, right? Just cash flow negative, and losing money. But what our analyst was able to do was say, look, this is all discretionary spending on CapEx, which now has ultimately become AWS and, really driving the cloud and all that stuff. And if they stopped all discretionary spending, they could have $10 in earnings. This is in the early 2000s. $10 in earnings at whatever multiple, the stock was undervalued by 50% at the time. And that's why, you saw one of the biggest value investors in the world at Lake Mason, Bill Miller, make it his biggest position. And so that's really how you have to think about the tokens and the companies, is you have to follow the cash. And so today, the tokens that have no transaction fees, they're not going to ever have intrinsic value. If they have no intrinsic value, there's no way I'll ever be able to value them. Then it's a supply-demand game. And, for example, with Bitcoin, if you ask me what's going to happen with Bitcoin, supply is around 19 million, maybe going to 21. Demand seems to be rising. I think it goes higher. Do I have a target price? Not a chance, because I have no clue. But the tokens that have transaction fees that are rising because of the ecosystems being built on, their value is rising. I just don't know what that base value is yet until the ecosystem matures. And the companies, if they're somehow making money off of that token through cash coming in, we can then do intrinsic value from there as well. And that's the investment framework I put around it.
Transaction cost for XRP is designed to increase along with the load on the network. So right now the transaction fees are minimal, 0.00001 of a drop of XRP. And it's deliberately to or inadvertently overload the network. It's to slow the network down. When things go too much and the value increases, it's going to stop people from or reduce the amount of load going. The current minimum transaction cost required by the network for a standard transaction is that 10 drops, but it can increase due to higher than usual load. This mechanism is in place to protect the XRPL from being disrupted by spam and denial of service attacks. I'm going to end this off here. I want you guys to hear this. This to me I found very interesting. Check it out.
For whatever reasons. But it's something that is holding the US back the most. It doesn't hurt that the US is also the dollar's the reserve for the world, but it's also what's the Bank of England and the ECB are struggling with. But even with that, the ECB expects to have a pilot at least within 5 years of their digital currency. The Bank of England expects to have e-pound by 2030. And I would think, the Fed will have something after that. But we're not talking next year. We're not talking 5 years. We're talking really 10, 15 years.
So we've seen a few connections now that's led us to the 2025 date being an interesting year. Should we expect something? Should we not? I'm not expecting something. However, in terms of my forecasting, I'm forecasting an uptick like this. This is just my modeling based off of what I'm seeing in terms of scaled back macroeconomics, and then right in microeconomics, and then in the mid-economics in that as well. I'm still learning the charts. When you zoom out of the charts, you can see what's going on as well. That being said, love you guys, respect you guys, and I'll catch you on the next one.
We making moves. We making major moves. We making moves.